only mode.
Hello and good morning, everybody. Welcome to this special webinar. I am Devarsh. I'm joined by my two colleagues, Subash and Ajit. Good morning, Subash.
Good morning, everyone.
How are you doing, Ajit?
Yeah, I'm doing good, sir. Good morning, everyone.
Good morning, everybody. So let's start without further ado. We'll straight away go into the presentation. So first and foremost news from the markets are that Fed is done. That means interest rate hike, which has been troubling the markets, are done. I'll show you the charts of the interest rate, so that will give you the picture. So almost from near zero level, interest rates have gone to 5%, and that was troubling the market. That was troubling the many asset classes across the world. See, the cost of money is a driver for many asset classes, and the news from US market is that now, at least for now, unless there is a war which is unanticipated or any huge jump in US Treasury, interest rates will not go up, and that is indicated by US 10-year Treasury. So this is the chart of US 10-year Treasury. It was almost 0.5 or 0 in 2022 when COVID hit. From that 0.5 level, it was continuously rising. In 2022 October, it made a peak around 4.5, then corrected to 3.5. That yielded a huge rally into market. Again, inflation was much more than expected, and in order to control inflation, Fed had to increase the interest rate, kept it higher, and US 10-year Treasury yield went to as high as 5%. In just last few sessions, interest rates in United States has come down from 5 to 4.5, and this is a big decline, and it is the beginning of a trend where we may see it consolidate between this 4.3 to 5 level for many months to come. And when this happens, the Indian markets, the global markets do well, and that is what has happened. S&P 500 has posted one of the strongest week. So let me show you. Almost 4% rise has happened over the last 1 month. The same has happened over the last fortnight only. All the global markets are up. International markets like Nasdaq has surged. Compared to that, our markets are still down. We are in a range, and my colleague Subash will show you what kind of range are we in, and how and when we break out, what are the implications. Within the market, which is range bound, reality, PSU, and oil and gas, these are the sectors which are leader of the rally, especially the PSU stocks, oil and gas, and reality, and these are likely to lead the rally. So keep an eye on these sectors. Automobiles and metal, after a stellar run, they are having some correction, so they can also have some pullback in future. Foreign institutional investors, which were aggressively long, which were buying continuously, have been selling, and their net long position in cash market has come down. This trend will also is likely to reverse if international markets sustain. This chart is nothing but the indications that whenever the interest rates peak, the international markets, the global markets rally. So here, in the interest rates peak, valuation become attractive, and this black line is where markets rallied. Again, here when interest rate peak, market rallied. So same is expected that now if interest rates at peak, this black line should go up and international markets should rally. For the November month, not many important economic events. Regular monthly data is going to come. Most of the important events are now behind. Usually the November to December month is traditionally, cyclically, seasonally a good month for the market. After the Ajit presentation, I'll show some slides and where I'll present to you why this November December period is usually a good month for international markets, and same is likely to follow into India. what are our recent recommendations? So 3 new MTFs have been issued, Spandana Spurti, PNB and Mangalam. 2 new fundamental recommendations, Thomas Cook and Aries Life Sciences have been issued. And apart from that, we have come out with the 10 Diwali picks, Samvat picks. You have already received the report. If you haven't received the report, it is available on our research WhatsApp, it is available on our website. And we are going to do a special webinar on these 10 stocks. So I'm not going to take much time here. Now I'll hand it over to my colleague Subash to share his insights from perspective of technical analysis. Over to you, Subash.
Yeah, thank you, Devarsh bhai. Is my screen visible?
Yes.
Okay.
Go ahead.
Yeah. So good morning, everyone. So I will be giving you the technical outlook for the next fortnight. So markets have bounced back this week after 2 weeks of losses, and market breadth was positive in 4 out of the 5 sessions, which indicates positive sentiments. The 14-day RSI too has bounced back from oversold levels and is now above its 9-day EMA. So if you see this Nifty daily chart, we can see that there was a sharp fall, and after that fall we have risen from the 200-day EMA and made a higher bottom. And in the last 2 sessions we have also crossed the previous swing high of 18,837. So even the 14-day RSI also is 18,837, and the 14-day RSI also has bounced back from oversold levels and has crossed the 9-day EMA. So it is looking positive for the near term, and we could be headed higher towards the 20-day SMA and even the 50-day SMA, which is currently at 19,423 to 19,561. And the short-term trend reversal level is now at 18,973, which is the higher bottom. If we look at the weekly chart, we are still an intermediate downtrend because we are making lower tops and lower bottoms, but the short-term trend has turned up. Now, coming to the sectors, most of the sectoral indices have ended higher this week. Top gainers and outperformers were the Nifty Realty, Media, PSC, Oil and Gas, and also PSU Bank indices. The only loser was a Nifty Auto Index. Looking at the sectoral charts, we can see that most of the sectoral indices have reversed their recent short-term downtrend, which indicates that there is more probability of the markets moving up in the near term. So the sectors that are looking the strongest are Nifty CPSE, Energy, PSC, PSU Banks, and Realty. If we look at the CPSE daily chart, we can see that the index has bounced back from the 50-day SMA, and now towards the end of the week, it has also closed above the 20-day SMA. 14-day RSI too has bounced back from oversold levels, which is encouraging. Looking at the energy index, we can see that the index has made a double bottom just above the 200-day EMA, and in this week it has also closed above the 20 and 50-day SMA. 14-day RSI too is in rising mode after bouncing back from oversold levels. Realty index has risen sharply this week and closed at a new 52-week high. So that is an encouraging sign for the index. Coming to our outlook, Nifty remains in an intermediate downtrend, but short-term trend, as I said earlier, has turned up. So further upsides are likely for the Nifty once the immediate resistance of 19,276 is taken out. In this scenario, we could see the Nifty rising towards 19,423 to 19,561. Broad market indices like Nifty mid cap and small cap too have outperformed this week. If we look at the small cap daily chart, we can see that it has reversed the recent downtrend and has also closed above the crucial moving averages like 20-day and 50-day SMA. 14-day RSI has also bounced back from oversold levels. So even broad market indices are looking positive. And if you look at the mid cap index, it has bounced back from the 20-week SMA. So coming to the conclusion, markets remain in an intermediate downtrend, but short-term trend has turned up as Nifty has crossed its previous swing high of 19,234. So Nifty could rise up to the resistances of 19,423 to 19,561 in the near term. Broad market indices like Nifty mid cap and small cap too have reversed their recent short-term downtrend, which is a healthy signal. And with many sectoral indices too in a short-term uptrend, and many key global indices like Nasdaq and S&P 500, they have also rebounded strongly. So the odds seem higher for further upsides in the near term. On any downsides, it is important that the crucial supports of 18,973 hold. Otherwise, the short-term trend will again weaken and we could be headed lower. So these are the crucial supports to watch for the short term. Now that's all from my side. Now over to Ajit.
Ajit, you are not audible.
Hello, sir. Am I audible now?
Yes, go ahead.
And my screen is visible?
Yes, it is visible.
Yeah. So let us now understand the market from a derivative perspective. So what we have seen in the last week is, during the week is, we have seen 7.5% rise in the open interest with Nifty rising by 0.96%. This means we have seen long build-up during the week. So if you look at the previous week, there was a short build-up, and comparatively, we have covered up the short and long build-up has been taken place in Nifty as well as in Bank Nifty futures. In Bank Nifty, we have seen 3% rise in the open interest with Bank Nifty rising by 1.25%. And from a call and put writing perspective, we have seen 19,200 and 19,000. We have seen a lot of put writing, and calls have been written at 19,400 to 500 odd levels, which we can further clarify with the help of the open interest build-up chart. So yes, this is a very important chart. From this chart, we can plan our trades for the coming weeks. So what we can see here is we can see put writing at 19,200 and 19,000 level. This means whenever market shows some kind of a correction, this can take hold near 19,200 and 19,000 level, because this near this level there is huge put writing has been taken place. So this will act as a support in coming weeks and in coming days. And 19,400 and 19,500 level call has been written. Here we can see huge call open interest has been seen at 19,300 level. But if we look at the market gift nifty, it is now opening above 19,400 level. So if that happens, the huge again short covering will take place, which will further take this 19,300 to 19,500 level. So whenever this thing happens, we can see that market step by step it goes up, because the call writers, they get trapped and they have to shift their position. Now they will shift their position. They may shift their position to 19,500 level. This is a very good sign for the Nifty futures. And if you look from the FIS point of view, they have been still they have created short in the index future segment, where they have sold 470 crore with open interest going up by 49,090 contract. But on the contrary, they have built long position in the stock future segment. Therefore, they have bought 1,437 contract with open interest going up by 52,872 contract. This is a very positive signal for the stock future segment. And if you look at the FI's long to short ratio, they have been at oversold zone from so many days. The below one is a oversold zone. Below 0.32 is a oversold zone. If you look at from 29 September continuously, they have been in an oversold zone, and now there is a sign of short covering from them. So slow and steadily they are covering their short. Though we can see there is a short build up by FIs, but they are covering their short. If you look from a ratio perspective, so if market tries to sustain above 19,400 level, they will definitely cover their short, and which can lead to huge short covering rally in the Nifty. So what will be our outlook for the week? So what we have to do is we have to keep a stop loss of 19,000 level, because we have seen that there is a huge put build up, put writing has been taken place. And once Nifty crosses about that 19,500 level, we can see a short covering which can take Nifty to 19,800 level. If by any chance, due to the global cues or any other issues, if we breach 19,000 level on a lower side, we need to be ready for the correction up to 18,800 to 18,600 level. This is a very worst case scenario we are seeing, but we have to be prepared for that. And in the case of Bank Nifty, we have to keep a stop loss of 42,500 level. On the higher side, we can see 43,800 to 44,000 level where call writing has been taken place. And if you look from a sector point of view, we have seen long build up in infra, oil and gas, and media sector, which is also coinciding with a bullish pattern in those sector which has been presented by Subash. So we can keep infra, oil and gas, and media sector in our watch list and can take a good trade in those sectors. Yes, sir. Thank you.
Okay. Thank you, Ajit. Is my screen visible?
Yes,
Yes,
visible.
sir. Your screen is visible.
So what I wanted to show, as my colleagues have pointed out, that markets have bottomed out. Here is the chart of S&P 500 and 10-year US Treasury yield. So what I was trying to say in words, this is also shown in the picture, that as and when the interest rates peak, the indexes move away higher, and that's what has happened. S&P 500 has moved higher. Let me show you in charts also, international charts. So this is the chart of US Treasury as I have showed you. From 5 level, it has come down to 4.5, and that is a very good sign. Now this is the chart of NASDAQ, and as soon as the interest rate peak, it has had a strong rally, and it has broken a short-term, intermediate, short-term and intermediate levels, and now it is showing good signs. This is the chart of S&P 500. A sharp rally from the bottom has happened. Now for seasonality, let's see stock markets and bond market returns during the when the interest rates are paused, like what is happening now, that more or less consensus is that the interest rates have peaked. These are the areas, time in history where interest rates have been paused, unless one or two instances like this where the S&P stock market in return was 7%, mostly 17%, 19% kind of return has come in the period where Fed has stopped raising rates. So that is the environment which we are going to see in now till whenever the interest rates are cut, when the economy becomes weak, then stock markets are likely to do well. International markets and Indian markets can also do well. Now, what about November to December period? Historically, in US markets, as I've been telling you, I mentioned the midweek also, and this chart is the representation. Usually, American markets do quite well in the end of the year. November to December is a very good period. Average 3.5% return has been over the years. Only 10-15% of the time they usually go down. So seasonally, cyclically, markets are going to be in a upturn. Interest rates have a peak. We are near intermediate resistance, and whenever we strongly close above 19,500 with proper volumes, expect markets around the globe, around India to shoot up. Earlier, our stance was that we have to remain cautious. We have been asking investors to preserve capital. Mid cap and small cap, we asked that book profit and move to large cap, preserve capital. Now we are reversing this stance. It is important to remain now stock specific. money will be made in now mid cap and small caps. Money will be made in individual ideas, and that's why we have been bringing out such good ideas. 3 emerging calls which will increase going forward, 3 fundamentals calls, 2 fundamental calls, and these ideas will increase. As I have been pointing out, more than 100 ideas in MTF, more than 100 ideas in fundamental side have been generated and presented to you, and they have generated very good return. We have negotiated the rough patch, and now I think from here we will have a good stock specific market. So be aggressive, go out and talk to your customers, talk to your friends and colleagues, benefit out of the research which we are presenting, and I think we are going to have a good patch this Diwali, and from this Diwali to next Diwali, it is going to be a bumper year for global markets, Indian markets. Till May, June, there will be volatility because of this politics, because of the geopolitical reasons. We have to navigate that, but all in all, India is going to attract a lot of capital. From June 2024, we are going to be added to global bond indices, and that will also lead to a lot of capital coming into India. So signs are there that we are headed much higher, and I hope everybody benefits out of this outlook. Now, if you have any questions, we'll take it about 3-4 questions. So if you have any question, depending upon the screen you are using, look for a question mark symbol, press it, a window will pop up, you put your question, and it will come to our screen, and we will try to answer as many as possible. Meanwhile, Ajit, can you just refer to your sectoral slide and see where the open interest and price buildup is there, so investors, traders can keep focus on the sectors next week, next fortnight. What are the important sectors?
So the important sectors is infra, oil and gas, and media. Majorly infra and oil and gas.
Okay. All right. So one question is from Arun Pandey, outlook on private banks. So private bank results are good, but valuation wise, we do prefer some PSU banks compared to private banks. So large PSU banks are on our radar. Depending upon the SBI's results, I think there is a possibility that PSU banks can continue to outperform. So our focus is towards PSU banks. Private banks can continue to do well. ICICI Bank results were also good. So leaders like ICICI Bank can continue to do well. That is the outlook. So sectors where one can go aggressively long are infrastructures, construction companies, real estate, realty, and PSU banks. If you want to go aggressive, Ravi Patel is asking which sectors to go aggressively in mid cap and small cap. So you can go for PSU banks. Smaller PSU banks are usually good for trading the real estate stocks and infrastructure stocks. Amit is asking about railway stocks. So usually a bull market, there is some leader, and a leader of last rally usually do not perform in the next. So at higher levels, I think railway stocks may find some distribution. It is better to look for new leaders rather than remain invested in the previous one. Yes, it has to be selective. Don't go into railway PSUs. Vijay Balakrishnan asking, I am more inclined towards PSU banks and other smaller PSU stocks. Defense, railways have had a sharp rally. It is better to look for other ideas in PSUs. Hemant. Rahul is asking about Hang Seng B. So Hang Seng and Chinese market is a mystery. There, the more than the economics, the political and the social impact of their action is being driven down the political system. What has happened in China is that they had created a lot of wealth. They have created a lot of companies and billionaires, but now the Chinese premier is looking towards more equitable growth. He is believing in distributing the wealth which has been generated towards the lower strata of society. So a lot of rules have been created, which is very detrimental to listed companies, which is detrimental to billionaires, and that's why there is a flight of capital. There is flight of capital. Recently, one of the largest ETF providers Vanguard has decided to pull out of the Chinese market. So China, Hong Kong, we are not recommending other markets. And especially by June, we are expecting a lot of money which was there in international markets will come into India. So people who do not understand India are trying to understand India. They want to come from June of 24 to for 3 years, 5 years. They are going to invest to India. And if you want to invest in June large capital, you need to start homework now. So they have started their homework. 3-4 months they will study, and then a large foreign capital will come into India. So no need to go to outside of India, Hong Kong and other markets. Opportunity is there in the Indian markets. Khushbu Singh is asking about metal sectors. So I'll ask my colleagues to look at Nifty metal and Nifty metal derivatives data. But fundamentally, I can say that the Chinese economy is the large guzzler of commodities, and they have been slowing down, and that's why commodities are not doing that well. Now there are signs that they have started putting money into the system. Almost $1 trillion worth of packages have been announced slowly and quietly by the Chinese government in order to prop up the economy, in order to prop up the real estate sector. So those things will support metal, and at lower level, now metal stocks should rebound. I'm expecting that next 15 days, we should have some rally in steel stocks. So that is the outlook on metal, Khushbu Singh. Now, I'll request my colleagues, Ajit or Subash, if you have any opinion on metals, please share. First, Subash. Subash, do you have any opinion on metals?
Yeah, I'm just looking at the chart. Yeah, metal index has bounced back from the 200-day EMA, but it has not yet crossed the previous swing high, which is 6522. So once it crosses that, then there could be some momentum on the upside. So it needs to cross that 6522 resistance.
What is Karnik is asking me stop loss. So Subash, what is the level below which we have to become cautious for Nifty?
For Nifty, so that is the recent low. The low is 18,973.
So all bullish bets should be with the stop loss of 18,900. If we break that, Karnik, we should reduce our long positions.
Yes, yes.
Okay. Oh, there are more than 20-30 questions there are on my screen. So I'll try to pick one or two. Amit is asking why power sectors are doing well. Power sector has gone through a fundamental reform. Earlier, many state electricity companies were not giving money to generating companies. Government has come out with a scheme. Now they are forced to give money back to the generating companies, and for that government has given mandate to PFC and REC to lend them. So PFC, REC is lending the state government is giving money to the power companies, and power company, the fundamental problem of theft of the collections all are being solved, and that's why power sector is doing well, and they are continue to do well. There are opportunities in the sector which we have been highlighting through our picks. Pharmaceutical sector technical view. Subash, Nifty Pharma, can you look at the chart and share?
Yeah, I'm just checking it. Yeah, we have seen a bounce in the pharma index, but it has not shown a very big strength. So we'll have to see if it can cross the immediate resistance, which is 15,002. If it crosses that, then we could see a pickup in the momentum.
Okay. Bhavik, congratulations for recently being a chief risk officer. Bhavik is asking about the cement. Any update on cement? So fundamentally, cement stocks and the input cost inflation. Recently, the cost of cement inputs have come down. Last quarter, they used that to increase the market share. So most of the company reduced prices and try to gain the volumes. This quarter, now they are getting a lot of demand. So they are increasing the prices, and they are also increasing the sales. So outlook from 6 to 12 months on cement company is very positive. In fact, somebody asked where we should look at opportunities. So apart from PSU banks in mid cap and small cap, smaller cement companies can also continue to do well. It is an industry which is quite consolidated. There are always complaints that there is a cartel in cement, and that's why prices do not fall even if demand is not there. And that's why these companies continue to do well. There is a consolidation. Recently, Adani's took over Shangi Cement. So smaller or marginal players are being rooted out of the market. And that means companies which are smaller are up for grabs by larger players like Birlas and others. And that's why some cement companies are likely to do well. Any view from derivatives? Any cement stock, Ajit? Ultratech or anything which is popping up on derivatives?
Yes, sir. So Ultratech, and we have also open position in Mangalam Cement, if we MTF
Yes.
position. So that is also looking good. Even Sri
Yes.
Cement
Mangalam,
and
yeah, thanks, Ajit. So Ultratech, Mangalam are the stocks one can look at. I think it is already half an hour. So thank you everyone for joining. There are so many questions. Obviously, you have our numbers, you have our research group. We get about 20-30 queries every day on our research group, and our team is more than happy to answer any of your queries. I hope this session has been useful to you. Have a great weekend ahead. Thank you, Subash and Ajit, for joining. Have a wonderful weekend.
Bye.
Thank you.
Bye.
We'll close this webinar. Thank you.